After breaking above its downtrend channel just 2 weeks ago, the market slipped again last week. What dragged the PSEi lower? Who are the standout movers? And what should investors watch out for this week? It's time for... Hi everyone! Welcome to another episode of Intelligent Investing with me, April Tan. The PSEi fell 3.8% to close at 6,027.12. Market breadth was weak, with 172 losers against just 91 gainers. On the surface, foreign investors looked like net buyers at 6.4 billion pesos. But this was distorted by a big block sale of RCR shares. If you strip that out, foreigners were actually net sellers of about 690 million pesos. Why? Peso weakness was the main drag. The peso lost 1.8% to 58.11, in line with other regional currencies. The Thai baht was down 1.2% and the Indonesian rupiah 0.8%. Dollar strength drove this move, with the US dollar index up 0.5% week on week. And historically, a weak peso has weighed on local equities. Actually, the weaker peso, I think, has partly to do with the higher US tariffs. It would lead to weaker exports to the US, not only from the Philippines but in other ASEAN countries as well, which may be one of the reasons explaining why it's not only the Philippine peso that's weaker, but also other regional currencies. So given that, the outlook for exports is not good, that might actually mean that, regional currencies, including the peso, might weaken, because that would negatively affect our ability to earn US dollars. Bond yields also pressured sentiment. The local 10-year yield rose to 6.03%, while the US 10-year moved up to 4.18%. This is despite the Fed's recent rate cut. Higher yields make equities less attractive, especially property, REITs, and utility stocks, as evidenced by their poor performance last week. Let's talk about the decliners. Peso-sensitive names were hit hard. GT Capital down 10.1%, PureGold down 8.8%, and Cebu Pacific down 4.6%. SEB also suffered from rising oil prices, which increased 4.9% week on week, and news that it would slow down expansion plans due to prolonged global engine repair backlog. The company reduced its growth target this year to 13 to 15% from up to 25% initially, while its 2026 growth is projected at 5 to 15% amid ongoing fleet uncertainty. Ayala Land fell 5.7%, and it was weighed down by concerns that the government's intensifying anti-corruption drive could dampen demand for its premium residential projects, which has remained resilient so far. Lastly, RCR fell 8.5% after its sponsor RLC sold 1 billion shares at a discount. While the discount hurt sentiment short-term, it's actually positive in the long term, as it paves the way for around 28 billion pesos in asset injections. RLC still has a lot of investment properties that it can infuse into RCR, including 1.1 million square meter of malls, 250,000 square meter of offices, and 295,000 square meters of industrial and logistics assets. Plus rose 7.2% after filing for licenses in South Africa as part of its global expansion. The online gaming operator noted that South Africa is the largest online gaming market in Africa and is seen as a gateway to the continent's digital future. MWIDE jumped 6.7% after its board approved raising its dividend payout policy from 30% to 50% of net income. This also signals management's confidence in its cash flows and earnings growth prospects. Actually, the outlook is not very positive if we're just looking at the narrative, because I think the external factors are not very attractive. First, we'll finally see the full impact of the Trump tariffs, because remember, prior to August, we still saw a lot of front-running in terms of trade volumes. But, starting August, September, it will be the full impact already. So most likely we'll see a slowdown in exports and also further slowdown even in investments. Domestically, we might see some weakness, because remember, in the first half we also enjoyed election spending. We don't have that in the second half, and right now the government is doing aggressive anti-corruption investigations, and that might lead to slower government spending because remember, they've scaled back on certain projects for the meantime while the investigations are ongoing. So slower government spending as well, at least in the second half of the year. So those are some factors that might drag economic growth and corporate earnings in the second half, and because of that, maybe it will be difficult for the stock market to continue going up if earnings slow down. The BSP issued new rules requiring cash transactions above 500,000 pesos to go through traceable channels. This move aims to curb money laundering and boost financial transparency. Meanwhile, Governor Ellie Remolona said another rate cut could come as early as October if economic growth slows further, but hinted that larger moves are unlikely. I think it's really going to monitor what's going on with the economy. If, as Governor Ellie Remolona said, if economic growth slows down even further or disappoints significantly, I think this is because, for example, as of today, it's already cut rates by 75 basis points. So the Fed is also expected to cut rates by 75 basis points this year. In other words, inunahan na ni BSP, si Fed. Again, we always talk about the BSP conscious about the interest rate differential with the dollar. Unless it needs to cut rates, it probably won't, no? And the factor that it's really looking at is economic growth at this point. Inflation looks like it's still benign and will remain benign, so that is not going to be a problem. Technically, the market's picture looks weaker with the index falling below 6,060. The next support levels are at 5,960 and 5,820. This week, all eyes will be on the U.S. jobs data. Job openings come out on Tuesday with consensus at 7.17 million, while non-farm payrolls on Friday are expected to be at 50,000. If the numbers are stronger than expected, it could reduce the odds of more Fed rate cuts, and that might hurt global markets, including ours. This week's stock spotlight is on Meralco, as shares broke down last week after consolidating since June. But the decline is really tied to broad market weakness because Meralco's fundamentals remain strong. Let's look at the numbers. In the first half of 2025, Meralco's profits grew 10%, beating expectations. The main driver? MGEN, its power generation arm. MGEN's earnings surged 51.5% in the first half, offsetting weaker distribution revenues. This includes the first-time contribution from Chromite Gas, its LNG platform investment. To put things into perspective, MGEN's contribution grew from just 1.2 billion pesos in 2021 to 10.8 billion last year and 9.4 billion pesos already in the first half of this year. Today, MGEN accounts for 37% of Meralco's profits. What makes Meralco even more compelling is MGEN's growth pipeline. By 2030, it aims to double its capacity to over 10 gigawatt of sellable power, with prospects like the 3.5 gigawatt Mterra Solar, the 1.2 gigawatt Antimonan 1 Energy, as well as expansion of projects in Batangas, Cebu, and a 600 megawatt gas plant in Singapore. MGEN is also exploring Malaysia, targeting up to 1,500 megawatt by 2028 to serve rising data center demand. These projects could supercharge earnings in the next 5 years. But why the dip? Why is this ongoing sell-off a buying opportunity? There are 4 reasons. First is its defensive business model. Power demand is resilient even during economic downturns. Second is the growth kicker. MGEN's expansion could materially boost Meralco's profits over the next 5 years. Third is Meralco's attractive dividends. Meralco currently offers a 4.6% yield. And fourth, undemanding valuations. After the sell-off, the stock is beginning to look cheap relative to its growth prospects. So intelligent investors, you may want to take advantage of Meralco's recent weakness as we see good accumulation opportunities below 504 pesos per share. For more on this, check out our recent interview with MGEN. Link to the video will be in the description. That's it for this week. The peso's weakness and higher bond yields dragged the market back down, but gold miners and select names managed to shine. Investors should stay cautious, watch those support levels, and keep an eye on US jobs data this week. If you found this market wrap helpful, don't forget to like the video and subscribe to my channel at April Tan Official for more insights. Thanks for watching and see you again next time. Stay sharp, stay selective, and as always, invest intelligently.